Thank you, Andy. Hello, everybody. Good morning. Thank you for attending the supply trend session. In my presentation, we will briefly review the updated but usual information from key indices related to titanium production and to the titanium scrap market in particular. We will ask a few questions along the way. I don't know that I'll have many answers. I liked Vince's comment, the only thing certain is the uncertainty that lies ahead. But I still believe it's good to ask the questions and take a look at the factors that can affect our industry and the scrap market in particular. And now the slide only the lawyers will read. Okay. So we'll start with Airline Monitor and look at commercial aircraft deliveries and new orders booked. From there, we'll go to some USGS data related to ingot and mill product production, as well as scrap and sponge consumption. Then we'll take a look at some info from Roskill regarding melting capacity, and in particular, the BVAR capacity that was segmented in 2016 in the Roskill information, as well as mill product supply. And then finally, Argus and metal prices, Argus metal prices as well as Platts on a couple of the key indices on scrap prices. All right, so we've seen this picture several times this week. There are a record number of deliveries this year, and the upward trend is expected to continue for another 5 years. The bottom line here is there's plenty of orders to support strong demand for titanium ingot and mill products for the foreseeable future. And plenty of production should translate to plenty of scrap. And we do see the downturn there, the dip, I should say, around 2021. 2022, but then at least according to Airline Monitor, it does recover fairly quickly within the next 5 years. Being on the front end of the supply chain, will we see that dip a little bit sooner? Quite possibly. And now if we look at the commercial aircraft deliveries against new orders booked, perhaps noteworthy here is that deliveries may actually exceed new orders booked in 2017. Based on the first half and forecast from Airline Monitor. If it doesn't happen this year, I mean, certainly the trend would indicate that it's going to happen fairly soon. The rate of deliveries has been steadily increasing since 2010, with a 50% improvement over that period of time. However, as you see, the rate of new orders booked has decreased about 60% since peaking in 2013 and 2014. Does this indicate newer platforms like the Neo and the Max that were launched a few years ago are maturing and the buying surge for these models is behind us? Will backlog decline as buyers hold out for the next generation aircraft on the horizon? Will there be another ordering surge with those new aircraft, or will buyers simply switch platforms within their existing backlog? Related to that, here's a comment from the Airline Monitor. The backlog as a percentage of the world fleet is likely to decline from the present level of 50% to around 35%. And the implication here is that the industry has over-ordered relative to real capacity need. And therefore, we should not be surprised if we see more delivery deferrals. So, some downward pressure on new orders booked. Will this clear the existing backlog and set the stage for new orders? In any event, I think it's clear there are plenty of orders out there to support strong demand for the foreseeable future. Okay, switching now to USGS. Ingot production is up almost 40% since 2014. Mill products, however, as you see, have been relatively flat since 2010. Melting capacity has increased both globally and domestically, as we'll see when we get to the Roskill information. Domestic mill product has been pancake flat. And a question that comes to mind immediately is this due to demand? Is it due to capacity, or some combination therein? Looking at scrap and sponge consumption, they've enjoyed good steady growth over the last 5 years. Scrap consumption in particular has nearly doubled from the levels that we saw in 2010. Does this correlate with increased ingot production and cold hearth melt capacity in particular? Sponge consumption is trending upward, but still well below the peak levels that we saw in 2011. Now, just overlaying this, scrap consumption as a percentage of ingot production jumped 20% in 2014, but has been flat since then, despite economics favoring scrap over sponge and alloy. Certainly today, economics still favor scrap over sponge and alloy, and you can even see it has dropped off in the last 3 years. Comment here from the USGS. Titanium mill product shipments in the second quarter of 2017 were 9,610 metric tons, a slight decrease from shipment totals in the previous quarter. Again, this is September 2017, so this is brand new data. And ingot production totaled 22,300 tons, an increase of 37% from the previous quarter. Ingot and slab shipments decreased slightly from the preceding quarter. So kind of a mixed bag here from the USGS. Mill products are flat. Ingot and slab shipments are flat. However, ingot production is up. Turning now to Roskill, the global tie melt capacity. We see a 15% growth in tie melting capacity since 2012. In 2012, Roskill did not break out the different melting technologies like VAR and EB in terms of capacity. However, we do see that breakout in 2016. We're going to get to that in the next couple slides. Is this indicative of a long-term trend to cold hearth melt, and to what degree? And is the cold hearth melt responsible for the increased scrap consumption that we see? So looking at VAR versus EB capacity globally, the global VAR capacity is over 3 times the global EB capacity. So while maybe there is a trend to cold hearth melt, the industry is still dominated by the VAR technology. Turning to the US VAR and EB capacity, the US VAR capacity is double the US EB capacity. And I think we can ask, just in general, will additional EB capacity be added? Will this improve scrap incorporation rates as we saw the jump in 2014? Again, from Roskill, this is the mill products side. Roskill paints basically the same picture as the USGS with regards to mill products. Mill product supply has been relatively flat over the past 6 or 7 years, but has enjoyed small, steady growth year over year since 2013. Why are mill product shipments flat despite increased melting capacity both domestically and globally? Roskill comment, over the period to 2026, aerospace demand is expected to increase 5% per year. World supply of titanium mill products and feedstock melted products, scrap and sponge, are expected to keep pace with that. Roskill expects the scrap ratio to increase from 20% in 2016 to 30% in 2026. And with this increased scrap production arising from higher fabricated titanium demand, looking at ferrotite now, the ferrotitanium market is expected to remain well supplied with raw material at low cost. The forecast here is for slow, steady growth, and is that reflective of the current market dynamics? I believe the current market dynamics support the forecast, at least for the next few years. Turning now to Argus metal prices. Looking at the Aero scrap, dealer prices on Aero quality scrap have steadily improved since bottoming in late 2016, but still remain well below levels seen prior to that drop. And looking specifically at ferrotitanium, the 85% tie turnings have shown improvement over the past year and a half, despite ferrotitanium being largely flat over that period of time. Granted, very, very small improvement, however, still some improvement. And I'm hearing just this week maybe some additional upward pressure on the ferroti side. So we'll have to wait and see what the impact's going to be over the next few weeks. Turning to Platts, they do not show any improvement in their ferrograde turning. However, they do indicate some very recent improvement in ferrotitanium. I think overall, looking at both ferroti and ferrograde scrap can be characterized as flat, maybe to some improvement, but again, still a long way to go to get back to levels seen in 2015. And of course, there are intangibles that can affect scrap prices. I thought this was an interesting snippet from an Argus Media article called Airbus Targets New Supply Deals, and actually dovetails kind of nicely with what we heard from Airbus on Monday. Titanium demand is linked to increased use of composites. We're getting more and more familiar with that. The aircraft makers, again talking about Airbus, their spending on titanium raw material is on course to increase by 180% between 2013 and 2020. However, Airbus is collaborating with suppliers to reduce the starting weight of titanium it needs for a finished part, and the company is looking for cost and performance trade-offs between the competing materials. We've heard phrases this week like raw material optimization, from subtractive to additive, and manage material consumption. All of this is to improve the buy-to-fly ratios by improving yield, seeking efficiencies, and alternative materials to titanium. So, despite what I believe is well-founded optimism regarding the aerospace industry and titanium scrap markets in particular, there are certainly challenges to overcome in order to maintain this optimism. Quick summary from all the indices. Certainly there is increased fabrication and machining. There's more scrap available in the market today. Platforms are maturing. There is absolutely no downward pressure on manufacturing at the moment. We all feel that every day. Plenty of ingot and mill product in the pipeline. Downward pressure on ingot and melted product costs, as well as cost of production. There seems to be currently enough scrap to support demand, and I think we're enjoying a relative period of stability, relative stability within the scrap market.